Every semester, students at SDU deliver excellent assignments on various topics. They demonstrate that they have the relevant skills needed to analyze questions of relevance to researchers and business practitioners. In 2021, students worked on an assignment that aimed to explain what motivates firms to trade with or invest in specific foreign markets. In the following, we will present findings from 5 student assignments at SDU using quantitative research methods. This assignment is provided by Oliver, Carolina, Michael, and Thomas. They use factor and regression analysis to understand foreign market entry and demonstrate the relevance of a large market, and moreover motivate research on further aspects related to market opportunities. They call it entrepreneurship.
Hello and welcome to our factor and regression analysis. Without further ado, let's just get started. An introduction to the team we'll start with, then we'll go to an introduction to the case, test our hypotheses, our factor analysis, regression analysis, and then recommendation, interpretations, and more. So at first, my name is Thomas Iver Andersen. With me today I got Caroline Olsen, Oliver Lindby Rønler, and Michael Shirhin. We'll jump right into introduction to the case. Please, Caroline.
Thank you, Thomas. So if we take a look at our theoretical point of view, we have applied Bailey 2018 and Holmes et al. 2013 as a starting point in exploring institutional factors' influence on foreign direct investments. And we define FDI as an investment made to acquire lasting interest in our effective control over an enterprise operating outside of the economy of the investor. And institutional environments exist of both formal and informal institution, where the latter is a socially constructed paradigm that can guide the form of communications and behavior. Formal institution can be described by explicit values and standards that are guiding behavior and communication between parties in society. Next slide, please.
And at first, data was based on 203 different countries, which was investigated with a factor and regression analysis. Next slide, please. And the data used is collected from the World Bank, which in the start contained 18 different variables and are seen here. Next slide.
Yes, so we'll now jump on to our hypotheses. There have been created 3 different ones to thoroughly investigate different aspects of entry market decisions. Hypothesis number 1, H1, a large market promotes higher levels of FDI. Here we expect to see that there is a higher level of FDI within higher markets. H2, the lower level of bureaucracy from politics, the more FDI. We expect to see that there is a higher level of FDI within countries with a lower measure of bureaucracy from politics. The higher level of trust in legal institutions, the more FDI. So in hypothesis number 3, we expect to see there is a higher level of FDI within countries that have good reason to trust the legal institutions. We'll now move on to the factor analysis.
So based on our theory of Bailey 2018 and Holmes et al. 2013, we have determined 3 different categories: political, economic, and legal factors, which we believe have an impact on FDI. So firstly, if we take a look at the political factor, Holmes et al. 2013 argued that non-democratic political regimes may contribute to lower FDI. And also economically, Holmes et al. States that FDI decisions are reflected by the opportunities available in a country's market. Lastly, if we dive into the legal factor, Bailey 2018 argues that a strong legal system that protects property rights have a positive impact on FDIs. And these 3 arguments have formed our 3 hypotheses presented by Thomas. Next slide, please.
And then we coordinated the variables, and the 2 objectives with this exploratory approach were to identify underlying dimensions and bundle the 18 variables. And the three factors shown are the political, legal, and economical. Next slide. And afterwards, we computed the correlation matrix, and in order to complete the factor analysis, the model had to be tested and variables was removed. And this started with the first model, which wasn't suitable due to an insufficient level, as we found negative eigenvalues, and furthermore, the matrix was not positive definite. So due to KMO and MSA results, we tested our models and eventually found a model which we found acceptable, which was model 4. Next slide. And the variables have been checked for intercorrelations by applying the KMO. And we got a score of 0.71, which can be defined as quite good. And with the application of Bartlett's test of sphericity, we rejected the null hypothesis, inferring that there exists a correlation between our variables with a significant score below 0.01. And based on these results, our data is appropriate for performing a factor analysis. However, we chose to keep the level of population, even though it was below our threshold level of 0.5, as it has an implication regarding the economic factor. Next slide.
Thank you, Michael. So the last model gave us 4 different factors. The total variance explained provided us with 4 eigenvalues above 1, which again identifies 4 factors. The test showcases that 80.68 of the variance of the variables are explained by this percentage. 80.68% presents a very good score, as we wish it to be higher than 60%. For step 4 and 5, we created a rotated component matrix and named different components: legal institutions, political institutions, and economic. The 4th factor that we discovered, which is a mix of total employment and GDA per capita. We'll talk more about this later, but it surely is interesting. Our expected and realized factor building did not exactly match up. The primary reason for this is evaluated as data limitations within the previously built sample. Therefore, we reduced the number of variables. This primarily had an impact on the economic factor. Caroline will now go on with the regression analysis.
So based on our performed factor analysis, we can now insert our 4 factors: legal, political, and economic institution, and further on our new factor, entrepreneurship. We would like to test if the factors, our independent variables, have an influence on our dependent variable FDI inflows in US dollars. Next slide, please. So after performing our regression analysis, we can observe an R-square of 47.1%, indicating that 47.1% of our independent variables are explained by FDI inflows. Moreover, it can be observed from our F-test that some of our independent variables have a significant influence on FDI, as our p-value is below our alpha level of 0.01. Therefore, we reject the null hypothesis that our independent variables have no influence on FDI. Next slide, please.
Yeah, thank you, Caroline. Looking at the direction and strength of the relationships, we can clearly see that there's evidence for the most important drivers for amount of FDI. These factors are factor 3 and factor 4. These have a very satisfying significance level as well. The results also shows that factor 1 and factor 2 both have a lower importance for FDI and does not meet our desired threshold of significance, thus does not have a significant impact. The variance inflation factor is measuring the multicollinearity. It is below 5 for all predictors. This indicates that there is no issue in regards of multicollinearity and the information is not considered redundant. You may change the slide, please. In this next step, we're trying to improve our model by excluding or removing factor 1 and factor 2, which had too low significance. This gives the statistic model a slightly higher adjusted R-square and therefore is preferred. Our new adjusted R-square showcases a score of 42% compared to our previous score observed of 40.7%. This means that this new model will be the basis of the rest of our regression analysis. You may change the slide, Thomas. As our sample size is below 50 samples, we apply the Shapiro-Wilk test to test the null hypothesis that the variables are normally distributed. With a significant score below 0.01, we reject the null hypothesis, indicating that our variables are not normally distributed. This is further confirmed by our histogram, which is close to display normal distribution, but unfortunately not close enough. And I'll give it back to Caroline.
Thank you, Oliver. So we have created 5 different models, and model 5 had the greatest fit with the highest score regarding the adjusted R-square. And the model includes 2 factors, namely economic and entrepreneurship. And the 2 factors included in this model were determined by the high correlation scores and the satisfying significance level below 0.01, which indicates that the 2 factors have a significant influence on FDI inflows. And furthermore, we can detect a correlation between our variables and no multicollinearity, which we hope will be the case. Unfortunately, we might miss relevant determinants for FDI inflows as our error terms turn out to not have a constant variance. Moreover, we tested our error terms for normal distribution with the application of the Shapiro-Wilk test and our histogram, and we had to reject the null hypothesis, implying that our error terms were not normally distributed. Therefore, we also decided to go with a low alpha level of 0.01. Next slide, please. And based on our findings, we can confirm our first hypothesis, asserting that a large market promotes higher levels of FDI. And moreover, we reject hypothesis 2 and 3 as they showed no significant influence on FDI. And nevertheless, from our factor analysis, we discovered a new factor labeled entrepreneurship, and this factor seemed to have an influence on FDI. So if we have started out with a hypothesis concerning this factor, it is likely that it will be confirmed to have a positive impact on FDI. Next slide, please.
Yeah, and countries with low market size will have issues with attracting FDI. This can be an issue and will quickly create which came first, egg or the chicken-like situations. It can be established that the companies tend to do FDIs in countries with a higher market. However, it needs to highlight that this statistical analysis does analyze whether the FDI ended up being successful or not. Future researchers would be recommended to investigate variables within the field of entrepreneurship and heavily invest time resources to collect proper data. And yeah, I'll pass it on.
Thank you, everyone. At last, I'll just love to show the appendix here, which is an indicator of this presentation truly as a sign of collective work and continuously sparring between the different team members. I'll leave the literature on for 10 seconds and then we'll close the presentation down. Thank you for tuning in.
I hope you enjoyed watching. Feel free to get in touch in the case of any questions.